The meeting is being recorded.
पहले आता था, पहले आता था। जो बाकी मेरे दोस्त है ना जिनका बिजनेस अकाउंट है उनके नाम पे लिखा आ रहा है। कहता पहले ना तो मुझे, मैं दिखा नहीं, इसका ध्यान नहीं दिया, मैं ध्यान नहीं कभी दिया, नोटिस ऐसे किया ना कभी। बिजनेस किया हो तो उसकी सेटिंग में भी देख लो। ये भी चीजें हो सकता है अपना बिजनेस अकाउंट ऑन ना किया है की पता है अपन और स्कॉट थोड़ा चीज़ होती आप तो हले कमजोर हो गए हैं खिडारी हैं हले नवे नवे पहली बार देखा, पहली बार बैठे मगर शायद बैठे हो, मैं ले लूँ सीमा भी देखता बैठे अगली बार।
ले लेना थोड़ी देर में वापस।
আমি সাউন্ড পাচ্ছি না কেন বল? হ্যাঁ, কানে যেতে হবে।
The meeting is at 4 p.m., right?
Yes,
Hello.
sir. Yes, sir.
I'm on time.
Prakash, sir, shall we start?
Yes, ma'am. I'm ready to start. Yeah.
Okay.
Shall I start?
Yes, yes, sir. I'm just giving the introduction, sir, first.
Sure. Yeah. Go ahead, Kajal.
Namaskar and good evening to everyone. Mr. Prakash V. Kukreja, sir, our speaker today, participating members of AVP, esteemed participating registered valuers, and my senior colleagues. I, Kajal Gupta, coordinator of this webinar, extend a warm welcome to you all in this program on behalf of Divya Jyoti Values Foundation, RP. The topic of today's webinar, as you are aware, is IBC Valuation Insights, Overcoming Hurdles and Embracing Potential. Valuation exercise is one of the critical activities under IBC and assumes importance towards ensuring time-bound resolutions, value maximization, and balancing of rights of stakeholders. Under the Insolvency and Bankruptcy Code 2016 IBC, the valuation of assets is one of the core features deal within corporate insolvency resolution process, CIRP. The process of valuation conducted by registered valuers helps to determine the current value of the assets that are to be liquidated. The requirement of valuation under the IBC is an important concern for registered valuers in all the three asset classes, that is plant and machinery, land and building, as well as for securities of financial assets. Valuer has to follow various rules and guidelines from the time of appointment until submitting the report. During this process, the valuer has to be overcome various hurdles. The IBC 2016 was enacted with the purpose of providing a more efficient and effective system for resolving insolvency in a time-bound manner so that assets locked in such enterprise are utilized more efficiently in the economy. With the rapid growth of the economy, there is an increase in potential for valuers, which is to be utilized. Because of these core objectives, the concept of registered valuer came into existence. This is therefore an important topic. That is why we have chosen this topic for CEP. Without losing any further time, I wish to hand over the mic to Mr. Prakash Kukreja, sir. But before that, I shall briefly introduce him to you all. Mr. Prakash V. Kukreja, sir, is a prominent member of our faculty, will be taking this session. Before I hand over mic to him, I will briefly introduce him to you all. Prakash P. Kukreja is a chartered accountant, a cost and management accountant, informative system auditor ICI, an insolvency professional, and a registered valuer. Also, he holds a certificate from NISM in market risk management and a bachelor degree in commerce from Pune University. Besides being a registered valuer, he has more than 19 years of experience in working with large multinationals and corporates and international banks in senior position. He's an experienced faculty member and is associated with various RVOs for CP programs for registered valuer. So over to you, sir, for a wonderful learning session for next 2 hours. Thank you, sir.
Thank you so much, Kajalji. Thanks for that introduction also. So very good evening to all of you. So I think what I'll do is I'll share my slide presentation, and I hope I'm audible. Am I audible?
Yes, sir, you are
I'm
audible.
visible. Okay, thank you. So I would request all the members to please be actively participating in this, because this is going to be a very interactive session. That is what I envisage to be. And being an IP and RV, so I have been on both the sides, and that is why I chose this topic, because I'm just on the verge of concluding one of my CRP as an IP. We have got into liquidation. So over the past 1 year, interaction with the valuers, especially for all the asset classes, the kind of challenges we had, it was a real estate project. So very interesting observations, learning I had, which I'm going to bring on the table. So I would strongly recommend all of you to share your perspectives. You can stop me anytime if you have any clarifications, or you can contribute with your insights and experiences also. So moving on, I'll move to the next slide. One sec, just give me 1 minute. Okay, so before we dive into the details of valuations in IBC, I think it's important to first look at some of the basics. And also, I would like to share here that I will not be getting into very technical aspects of IBC, though we'll be covering some aspects, but not very technical. We'll be focusing more on the practical aspects of it. What are the challenges, issues which RVs, and this all is going to be from RV's perspective. So what are the challenges, issues RVs face during the IBC valuation is under IBC. So let's look at some of the basics. Now, my first point was that why do we need valuation under IBC? So anybody would like to share their views, please? What is the core objective of having valuation under IBC? Anyone? Has anyone done valuation under IBC? I'm sure, because I can see there are more than 50 participants. Most of them are land and building. So I'm sure there would be people who would have done valuation under IBC, right? In case if anybody wants to put it in the chat, please feel free to put in the chat also. No one? Okay. So let's look at the preamble of IBC 2016. I'm not going to read the entire para, but if you look at the first 2 or 3 lines, it says very specifically that it is an act to consolidate and amend the laws related to reorganization and insolvency resolution. So this resolution word is very, very important over here. Of corporate persons, partnership firms, individuals in a time-bound manner. And I'm sure all of you know that IBC process could be CRP, liquidation, voluntary liquidation, everything is absolutely time-bound. So it has to be in a time-bound manner, maximization of value of all the assets, right? This is one of the another core objective of IBC, of such persons to promote entrepreneurship, availability of credit, and balance the interest of all the stakeholders. So if you look at some of the key aspects, it says 1, we have to resolve it, right? By finding the resolution applicant. Second, it has to be completed in a time-bound manner. Third, there should be maximization of value of assets. And fourth, it should be in the interest of all the stakeholders, because there are multiple stakeholders whenever we see any situations of a CRP or a liquidation. So there will be a COC. Within COC, you will have mostly the financial creditors. If it is a real estate project, then you would have the home buyers as well as one of the class of creditors. It could be the banks, ARCs, it could be operational creditors, it could be employees, or it could be NCLT also is one of these stakeholders in this. So objective is that the overall process is focused towards a resolution in a time-bound manner by maximizing value of all the assets and keeping in interest all the stakeholders. So that is where the valuation comes into place. So now if you see enhancing the asset value, if you have to enhance the asset value, you should know what is the value of the asset. And that is where the valuer brings in his or her perspective, right? So I'm sure you all would have went through basics of IBC. So whenever there is a valuer appointed, that value becomes the valuation of that asset. It could be land and building, plant and machinery, or SFA. That asset holds an important aspect if COC has to take a decision. In fact, there are some very recent amendments, as recent as 12th of February, 15th of February, day before yesterday. I'll be covering those amendments also in my session. Now, the IBBI is very focused that the valuer should be able to provide a reasonable way of justification. What is the methodology or approach he or she is going to use it while doing the valuation, and that could be either a CRP or liquidation. So that is why when you say enhancing the asset value, obviously the valuer will take a very professional approach, but it is important to understand whether it is giving the right perspective to the specific asset. Transparency and reliability in asset valuation. So I think this is a very straightforward point. The reason being because whenever a valuer is appointed, a valuer is independent of the corporate debtor, independent of the RP or the liquidator, independent of the COC. So that is where that independence brings in transparency and reliability also. And the most important part is comparative analysis for the COC to make well-informed decisions. So in one of the situations which I recently came across is that the valuation, let's say, for example, of the asset was 100, right, for all the asset classes. But the resolution plan which was provided, that was only 20. So I'm just giving a very hypothetical numbers to give you the perspective. Now, in this case, if you see COC ultimately has to take a decision whether they are okay with the haircut of 80%. Of course, this went through a lot of bargaining, negotiation with the resolution applicant, and that 20 came up to 30 to 35, not more than that. Still, the haircut was large. So that went into different discussions, negotiations, and ultimately, the COC also was on the verge of taking a decision to go on a liquidation. So if you see, this valuation was actually one of the basis of taking that decision, and well-informed decision, because if the COC thinks that they will be able to fetch higher value in liquidation, why would they accept a resolution plan which gives a haircut of 60 to 65%? Hence, valuation becomes very, very important over here. Now, just sharing one specific perspective, there was a Supreme Court judgment, and this was in 2020 in the case of Maharashtra Seamless Limited versus Padmanabhan, Venkatesh, and others. So its Supreme Court says that it appears that the aim of prescribing such valuation process is to help the COC make a decision on a resolution plan properly. So you can see that how this is how the valuation is so important in terms of this IBC cases. Anyone, any specific perspective, any thoughts anybody would like to share? . 。  . 。 . 。 . 。 . 。 . . 。 . 。 . 。 . . 。 . 。 . . . 。 . . 。 . . 。 . . 。 . . 。 . 。 . 。 .
. . .
。 . 。 Anybody? Okay. Now, what if valuation under IBC is overstated or understated? So I would really expect some kind of inputs over here. Can anyone tell me what if the valuation is overstated? Overstated basically means that if, let's say, the expected value of the asset, well, let's say 100, but it was overstated as 150 or 75, what would be the impact? Anyone? I think it's a very basic question. Anyone would like to share their perspective? In case if you want to put it on chat, absolutely fine. Okay, no problem. So I don't think anyone has done any valuation, seems to be, or maybe people are busy, not a problem. So if valuation is overstated, it would already lead to delay in the CRP process. Now, how that delay would happen? Because if the value, for example, as I said, if it is expected to be 100 and the valuation is 150 to 200, obviously the resolution plan, which will come from the resolution applicants, that would be less than 100. So which means the gap between the actual valuation, which is 150 to 175, and the resolution plan would be very huge, which means the COC would expect a better plan. So if they would expect a better plan, they will start publishing another set of Form G. So Form G is basically an expression of interest which is published by the resolution professional in the newspapers, and it invites interest from the various stakeholders who are interested to take over the company which is under CRP. So eventually there will be next set of Form G, third set of Form G, fourth set of Form G, depending on till the time COC gets the right value of that particular asset or the corporate data. So hence it would delay the process. Next, this delay would obviously lead to increase in the CRP cost, because as you all know, the timeline of the CRP is 180 days, which can be stretched up to 330, right? After a couple of extensions and other extension on account of legal situations. So 330 is max. Though practically the CRP runs at least for 2 to 3 years. But in most of the cases, if you see, because if the valuation would be overstated, if there is a delay, this delay would lead to cost. This would lead to additional of the RP's expenses, the IPE expenses, support services expenses, and obviously the Form G publication, because it is very expensive depending on what decision the COC takes, which paper to be published and so on. So this also entails the cost. Next would be resolution plan rejection. So if I go back to the same example that the valuation was around 150 to 175, but the resolution plan was proposed only around 50 or 60, which obviously because of this huge gap, there would be the rejection of the resolution plan, and eventually the COC may decide the company should go under liquidation. Okay. Now let's look at the opposite side. What will be the impact if the valuation is understated? So this eventually will diminish recovery value for both financial and operational creditors. I think it's very obvious. So this is another way example. If the valuation was expected to be 100, but let's say the overall value is only 50. So if the value is 50, the resolution plan has to be less than 50, which means whatever recovery would happen for the stakeholders, it would be very, very low. This would definitely impact the amount which they would be expecting in terms of their percentage or maybe the value as far as the resolution plan is concerned. So again, if you see, the valuation plays a very important role over here. Next, excessive profits for resolution applicant or the company's promoters. So in obvious cases is that you will get something which is, as a resolution applicant, you will get something which is very, very cheap. Why? Because the valuation was understated. And the last and the most important risk of reputational damage for the registered value. Now, how many of you agree that if you give an understated valuation, there would be a risk of reputational damage? Anyone? Does anyone agrees to this?
But this could happen in both the things, even in overstated valuation or also understated. This
Correct.
could be in both cases, not only in understated, but even in overstated also.
Correct, absolutely. But why do you think, Bhagwanji, that this would lead to reputational damage? Maybe
Yes.
overstated or understated?
It could be from the CIRP, the corporate resolution process. It has been delayed, and it could result into some. It could be discussed in the community that such and such valuer have provided this, and these delays and or maybe risks have been increased due to this valuer. That could be one of the factors.
Correct, correct. Absolutely right. I'll just cite one example over here. So I was one of the consultants as a resolution to the corporate debtor, sorry, to the COC along with the RP. And what happened is there was a valuation for all the three asset classes. And this project was somewhere in Mumbai where the land and building valuer provided a valuation of 1,000 crores. Approximately, I'm just giving a very hypothetical picture over here. 1,000 crores. And actually, the total stake of that entire project was only 300 crores. So the obvious question, which COC said, that if the value is 1,000 crore and the overall stake, the claims are on 300 crores, so why the hell it went into CRP? It's not possible at all. Then there were a lot of discussion in terms of the methodology, what went wrong. So there were two values, and the gap between those two values was huge, I would say. So when we further discussed and understood, so there were a lot of calculation mistakes in the land and building valuation. And eventually the rate per square feet which was taken for the unfinished project was also very, very high. And it was not supported with proper, I would say, the recent transactions or the market value. And eventually the valuation went under a lot of change, and then it came very close to the expected value. So that's what I personally experienced, that in terms of if it is overstated or understated, it actually definitely impacts the reputational damage of the registered valuer. And honestly speaking, the COC took a note of this specific land and building valuer who is doing this valuation. And when they saw that 1,000 crores came down to around 200 to 50 crores, such a huge drop in the valuation after changing the methodology. So it impacts a lot. So I would strongly suggest that whenever you do a valuation, please ensure that you are able to substantiate, justify the approach, the methodology. Anybody else would like to share anything? Any experience, any challenges of overstated or understated valuation?
So one thing is that I read somewhere that right now valuers को अपना approach भी valuation report में describe करना पड़ेगा, क्या ये सही है?
Sorry, क्या describe करना पड़ेगा?
Valuation approach.
नहीं, आपके रिपोर्ट में तो valuation approach describe होता ही है. I think that is part of the report. But what change which has come on 15th of Feb and 12th of Feb is that now the valuer, the RP or the liquidator will be conducting a meeting where the valuers would be part of the meeting, the COC, and they will be sharing the methodology and the approach with the COC or the SCC, Stakeholders Consultation Committee, which is in case of liquidation, COC's Committee of Creditors in case of insolvency. So the valuer would be sharing the approach, methodology, everything in front of these committees before finalizing the report.
Sir, one thing is I want to ask a one question कि अगर किसी भी फैक्ट्री का रेजोल्यूशन प्लान फाइनल हो गया है और उस फैक्ट्री के कुछ एरिया में लैंड लीज पे दिया हुआ है और लीज पीरियड अभी खत्म नहीं हुआ, तो उस केस में क्या होगा वैल्यूअर के लिए? कौन सी अप्रोच यूज करना पड़ेगा? मिक्स अप्रोच जाएगा या फिर रेंट एग्रीमेंट पे जाएंगे हम?
नहीं, सबसे पहले तो आई विल आस्क यू कि आपने कहा कि रेजोल्यूशन प्लान अप्रूव हो चुका है, सो
हाँ,
कैन यू
किसी
टेल
भी-
मी अप्रूवल एट व्हाट स्टेज? इज इट COC approved or it is NCLT approved?
एनसीएलटी केस सर।
Okay, so one, it is LCL, which means the resolution
हाँ।
plan is finally approved. Now it is needs to be implemented, correct?
इम्प्लीमेंटेड।
Yes.
हाँ, लेकिन उस केस
So
में ये
your
था कि
question is,
फैक्ट्री का
हाँ,
कुछ पार्ट
yeah, go
उन्होंने
ahead.
लीज पे दिया हुआ था ओनर ने।
But the land was belonging to the corporate debtor, correct?
यस सर, यस सर।
Okay.
तो उसका लीज
Okay.
पीरियड अभी बाकी था, तो इसमें तो मिक्स अप्रोच जाएंगे, दो अप्रोच जाने चाहिए।
करेक्ट, क्योंकि लीज जो है वो आपका एक तरह से इनकम आ जाता है, करेक्ट?
इनकम आ
तो
जाता है
वहां
वो,
पे
इनकम।
करेक्ट, सो दैट विल डेफिनेटली बी पार्ट ऑफ योर अप्रोच ओवर देयर।
तो उस पार्ट का हमें माइनस करके हमें रेंट एग्रीमेंट के थ्रू इनकम अप्रोच से हमें जाना पड़ेगा उस पार्ट के लिए, तभी हम उसका वैल्यूएशन कंप्लीट कर सकते हैं।
करेक्ट, इन माय व्यू यस, दैट वुड बी द अप्रोच।
ओके सर।
या okay, so moving on, some key takeaways from this overstated understated. One is that the accuracy in the valuation. See, I think this word accuracy is slightly a misnomer, so maybe I will just replace it with correctness or appropriateness, because you can't be accurate in terms of your valuation. It has a lot of judgmental aspects to it. So it actually has a great impact in terms of guiding the decision making of various stakeholders, which includes the IP, the committee, NCLT. In this case, committee could be COC or a stakeholder consultation committee. IBBI usually within every 3 to 6 months, they publish some journals, insights, and they always provide that this was the value, this was the resolution plan, and this was the overall claims. So they always give that perspective. So hence that percentage of valuation in terms of whether the performance of that particular resolution was sensible or was appropriate, or it was like there was a lot of undercutting. So those all things get highlighted. You can see those specific publications on IBBI website also. So IBBI uses this also for their performance analysis. Disputes over valuation reports can delay resolution or liquidation process. Very important. So if you see, ultimately the case which I was citing in the example where the value came from 1,000 crore to 200, 250 crores, well, it was eventually a small level of dispute between the COC, the valuer, and the RP, because nobody was convinced with the approach, not with the data, and hence eventually the valuer took more time, and instead of giving the report, let's say within 2 months, it took at least more than 3 to 4 months. So it eventually delayed the process also, because COC will not be able to take a decision unless that value is there. Difference in valuation reports can challenge IRP and RP. Yeah, this is a big challenge. And I will be covering this point very specifically in one of the slides ahead. Anybody wants to add anything? Any experience, any thoughts, anyone?
Sir, how could we define, now we are talking about differences in valuation report. So what percentage normally an RP can receive, or he can accept those differences in what percentage? Now we are talking about 100 is to 150 or 50, but closely 90, 110 is acceptable, or 95, 105 is accepted.
Okay, so Makanji, I will be covering this in the next slide, but let me give you a brief idea about it. I'm sure you know that, let's take an example of a CRP, and the RP has to appoint 2 valuers for each asset class, land and building, SFA, and plant and machinery. Now, which means there will be 6 valuation reports, correct? Excuse me. So 6 valuation reports. Let's take an example of land and building. So in case of land and building, when the RP looks at 2 valuations, there will be a difference. Obviously, there are obvious reasons because 2 different valuers, independent judgment, and so on. Though the data provided to them would be same, but yes, still there will be difference. Now, if that difference, as per Regulation 35 of CRP regulations, is more than 25%, this calls for the appointment of a third valuer. So this 25% has been already defined in the law. Now, when I talk about liquidation, so if a company was under CRP, then it went into liquidation. Very recently, I think 12th of February, that amendment came that if the valuers who are providing valuation under liquidation, because what happens is the liquidator can decide to have a fresh valuation if the company had already done the valuation in insolvency. So that is a call which liquidator has to take after consulting the stakeholder consultation committee. Now let's assume the liquidator says, okay, I want to do a fresh valuation liquidation, which means he will again call for 2 valuers for each asset class. And then let's again continue with the same example of land and building. So the liquidator looks at land and building value and sees that he will take an average of 2 valuations. He sees that this valuation is different from the valuation in CRP by 25%. So again, this 25% comes into picture. So this deviation has been defined by as 25%. Again, the liquidator has to discuss this with the valuers and decide along with the discussion with the consultation committee if they need to appoint any other value. So Makaranji, does that answer your question?
Yes, sir.
Okay. Anybody else? Any other questions?
So I have a small question, sir. Let's say you're explaining about the understated value and the overstated valuation. So let's say the difference because of the the valuations is not because of the any error in the calculation or any other calculation mistakes. But if the valuer has taken a different approach, a conservative approach, or aggressive assumptions, or all the valuation calculations are correct, but the valuation is high or low because of the assumptions taken by the valuer.
Absolutely.
So he or she can justify that assumptions why he has taken. So should we go for that, or should we make a case of a best, most likely value, or the aggressive value, or kind of a 3-3 valuation we should make, or we should what do you suggest in that case?
Okay, Gopalji, this is one of the very important aspects which I personally faced, and I'll be covering in the further slides. So if I have to summarize your question, one is that whether the valuer should adjust the valuation if it is understated, overstated, right, as per the expectation of the COC or the RP, or whether valuer should stick to the valuation provided based on the assumption, judgments, and caveat limitation disclosures as per the report. Correct? Is that your question? Am I correct?
Yes, this is the question.
Okay, very interesting question, and one of the very important point I'll be covering the next slide. But since we are talking about it, let's discuss it. Anybody wants to add to what Gopalji said? Anybody wants to share their views before I share my views? Anyone? So no one has faced the situation where the RP comes and says that, okay, आपकी value बहुत ज़्यादा है या बहुत कम है, so we are going ahead with the third valuer. No one has come across this situation. Okay, no problem. So Gopalji, this is my view. What I think is that the moment you as a valuer are challenged by the COC, by the RP, the first thing you should be able to justify on what approach and methodology you have done the valuation, which I think will be very straightforward, because you would have, based on information shared by the RP, you will take a call what approach based on what is the objective of the valuation, whether it is liquidation, whether it is insolvency, whether it's a going concern, or whether it is going to be sold in a slump sale. You would have those background basis which you will apply the methodology and the approach. You should be able to justify that, number one. Second, if you think that your approach is right, you should stick to it rather than adjusting to the what is the expectation of the recipient of the report. This is my view. But yes, it's very important that if you think your approach is incorrect, or maybe this could be modified based on the discussion, some other insights, then of course you can consider to revisit your valuation also. But I would not recommend that the valuation should be in line with the expectation of the user. It should be based on your completely professional judgment. So that is very, very important. Does that answer your question?
Yes, yes. More or less answer. You have answered the query. But I just want to add, should we, in our valuation in report, should we give three value kind of a, like, is this a most likely value? This is the value if you take a aggressive, positive approach, some aggressive approach, or this is the third value if you take some conservative approach. Should we, and we take a weighted average of that three values? Is it the right methodology?
No, then you will have to define what is conservative, what is aggressive. And then you will have to define why you are taking the average of all these three. Why aren't you assigning the weight like a 50% weight to aggressive? So when I see a valuation for startups, yes, this kind of approach methodology is used. But if I talk about land and building, plant and machinery, in my limited knowledge, I haven't seen this approach. But yes, what usually I've seen is that the values do provide a range. Say, for example, depending on a lot of assumptions, data available. So they would say that the value would be in the range of, let's say, 100 to 110 crores, for example. So that range is still okay. And where the person reading the report may take a call that, okay, I'm going to take it as 105 crores because it's a range. But it is always better to give one value rather than all these things. So this is my perspective.
Okay, thanks.
Yeah. Now, Gopalji, there is one more question which you have asked, but I will just see once we move to the next slide, and this question is related to appointing of the third value. So I'll cover that in the next slide.
Okay, sir. Okay, thank you.
Anybody else? Okay, so let's move to the next slide. Now, as per IBC, they have defined, at least in case of insolvency, that the value has to provide fair value and the liquidation value. So fair value has been defined very clearly. So I'm sure we all are aware about this definition. And once you're doing the valuation, obviously, this would be the perspective which you will keep in before providing the value, right? So in very simple terms, it will be what will be realized if it is exchange on the insolvency commencement date and between the willing buyer and willing seller at arm's length. Now, the another would be liquidation value. So this is again the realizable value of the assets, right? If the corporate debtor was supposed to be liquidated on the insolvency commencement date. And then one thing is that in case of liquidation value, if you look at Regulation 32, Regulation 35, if the liquidator decides to appoint a valuer afresh and not go with the valuation as per CRP, so then it makes very clear that the valuation should be for different aspects. For example, in case of liquidation, let's say if it is a real estate project, it would have land, it would have multiple projects on the land, it would have empty land, it would have an under construction project. So there is a possibility that the liquidation happens in parcels. Maybe the under construction project has been sold separately, the land has been sold separately, and so on. So in such cases, either the entire corporate debtor is sold as a going concern, or it is sold in parcels or slum sale. These all aspects should be understood when you are going to do valuation under liquidation. Discuss this with the liquidator and accordingly provide these specific values in your report. Now, in terms of liquidation, the way regulations mention about it is that it is a realizable value. So realizable value, as I said, could be under various scenarios of sale, which could be as a going concern, complete sale as a corporate debtor, or maybe into selling into different assets, parcels. So those all things should be taken into account. So please remember this whenever you're providing valuation under liquidation. So be very clear with the scope of work. Okay. Moving on. Now, what are the cases where the RVs are appointed under IBC? So anybody wants to share what are the different situations where an RV is appointed under IBC? Anyone? This is one of the most silent sessions I've ever come across, honestly. I just took a session on the similar topic last week, and it was very interactive. In fact, I was short of time. I couldn't complete all my slides. It was a very, very silent class. No problem. Maybe I think it's a Saturday evening, so people are on the weekend mood. Not a problem. So there are various situations when RVs is appointed, right? Section 46(2). When the educating authority decides to involve an independent expert for valuing transactions in case of undervaluation or basically avoidance transaction. Has anyone in this group been appointed by NCLT for this kind of a work? Anyone? Or anybody involved in this kind of a work? Okay. Regulation 27, this we discussed. So this is as per CRP. This is where the RP appoints 2 valuers for each asset class and within 7 days of the appointment, not later than 47 days. Then regulation 35, this is where the third valuer, which we just discussed based on Gopalji's query, that if there is a deviation of more than 25%, then RP will be required to appoint a third valuer. This is a very interesting topic, and we will discuss that in the next slide. The regulation 17, so this requires the IRP if the transition RP has delayed. So this is very similar to what we saw by appointing 2 values, but it is only situation is that if it is a IRP or RP. So just for your reference, IRP stands for Interim Resolution Professional. RP stands for Resolution Professional. Whenever a CRP starts, IRP is appointed, and the tenure is approximately a little more than 30 days. And the first COC meeting, the IRP should confirm as a RP. So this interim period is only for 30 days, and then RP should confirm. Maybe the same IRP can continue as an RP, or they can replace the IRP with another RP. So in this case, it says that if there is a delay in by the RP, the continuing IRP can appoint to ensure that the valuers are in place before the 47th day of the insolvency commencement. Now, liquidation regulation 35. So there are some changes which I'll cover in the next slides also. So if the valuation is conducted under CRP or fast track, then the liquidator can use that. If not, he can discuss with the stakeholder consultation committee, and then within 7 days, he needs to appoint again 2 sets of valuers for each asset class. Fast track regulation, just for your information, is basically for small companies like startups if they undergo liquidation or insolvency. So fast track basically means that like normal CRP goes on for 180 days, this fast track will be for 90 days. So they are specifically for small companies. Regulation 26, fast track. So again, the same, you have to appoint a registered valuer over here. Then Regulation 3, voluntary liquidation. So this also was very recently amended, that earlier it was maybe accompanied. Now it is must be accompanied by a registered values report. So these are some of the kind of opportunities for RVs under IBC. There could be various situations. But what I came to know recently is that I think more than 10 to 12,000 valuations have been done only under IBC. So IBC definitely continues to be one of the major ground where valuers get some kind of work. Anyone, any thoughts, any inputs? Anybody? Okay. Now let's look at the challenges. So as the title of my slide was hurdles, these are challenges, hurdles, again, especially from RV's perspective. And I would really request your inputs over here because this will be very interactive. Availability of information versus timelines. So I'm sure most of you who have done valuation under IBC would have come across this situation. Anybody wants to share their thoughts? What were the challenges they faced in terms of the information timelines? Anyone?
Paperwork we receive is so delayed that most of our valuation is done and then we receive some of the paperwork. In last one of my case, I was supposed to submit my report and I have received some documents later on which the IP got at the last moment and I had to revise total of my report again from start from the scratch. So these I have faced couple of times, these kind of things.
Understood. Yeah, this is very typical for IBC cases. So this was a CRP, right, Makarandi?
CRP case.
I can understand. And I'm sure it would have impacted your valuation after receiving the additional information.
Yes, yes.
And if I can ask you,
I had to change my approach totally for that after receiving those documents.
So I just want to understand again. Let's not get into details, numbers, but my simple question is: when you prepared your first report, let's say the number was X, and then the RP gave you additional information, then the number might be, let's say, X minus 1 or X plus 1, whatever, or Y. So my question is, did your number X instigate RP to give you more information, or it was just like because he was lacking the information?
He was lacking with the information.
Achha. Okay, because I have come across a couple of situations where the moment RV shares a draft report, RP वो बोलते हैं ना bulb जलता है. So oh, this is not correct, this is understated, overstated. Then there is a dialogue between RV and RP, and finally RV also says that okay, this information is not available. So RV has put the report correctly, but based on whatever information was shared. Now RP starts digging and sharing more and more information. The approach changes, the valuation changes.
No, so in that case, we had to ask for all the information one by one, and the last thing we received from them changed everything.
Correct, absolutely. I think somebody raised their hand. Somebody raised a hand. I think somebody had a question or something wanted to add. The name of the participant was OnePlus. I think that's the name of the phone, but I couldn't see the name. Anyone else? Okay. Now I'll just add one point over here that, see, I have been on both the sides. So to some extent, I do sympathize with RPs and RVs both. Why? Because one is a receiver, one is a giver, and the person who is giver also is very challenged. So in my case also, I had to file, erstwhile IRP had filed an application under section 19(2) of IBC, which eventually says that non-cooperation from the ex-management. So that brings a very, very big challenge. And eventually, in my case, the accounts, the balance sheet was not updated for last 5 years. So I had to ensure that from 2017-18 onwards, I had to update all the balance sheets and then give the latest perspective to the RVs, which eventually got delayed. But yes, at least we had a relatively better picture. So now let's look at some basics in terms of the timeline. So here what I'm trying to do is I'm sharing some ideal timelines for the CRP. So CRP starts ICD's insolvency commencement date, right? It starts T0. The RVs needs to be appointed, 6 RVs, assuming that all the asset classes are involved, before the 47th day. So within 47 days, the appointment has to happen. Now, ideally, the plan was supposed to be shared as per the model timeline on 135th day with the COC, or received of the plan from the resolution applicant on the 135th day. So once you receive the plan, the RP needs to share this plan with the COC, one, and along with the plan, he also needs to share the valuation, which is the fair value and the liquidation value. And the period is expected to end at 180 days, right? Now let's look at liquidation timelines. So LCD stands for liquidation commencement date. And if you see the first report which goes to NCLT, which is called Asset Memorandum, which includes the valuation as of specific LCD for all the assets, is on 75th day. Okay, which means if I have to, one second, okay. So if we have to just see, there are 88 days in case of a CRP to complete the valuation, and there are 75 days approximately to complete the valuation in liquidation. So my question to all of you is that, is this timeline of 88 days, 75 days sufficient? Any thoughts? Is this timeline sufficient?
It depends. If we, as discussed earlier, that if we get, in my case, in land and building, if I get all the documents as early as possible, the timeline is possible. But the documentation or the information we are receiving from all the parties, if it gets delayed, it is difficult.
Correct. Absolutely right. But since we are talking about an ideal situation, in my personal view, I think this timeline is more than sufficient. And when I say ideal, assuming that you have the information with you. So even if I think 1-2 months is a very sufficient time to do a physical, share the draft report, everything. So I think overall, but now there is a situation which is, there is a proposal, just to share with you, that a proposal which is expected that at least in case of CRP, there will be a revision in timeline. There may be, not will be, sorry. There may be a revision timelines where the valuation report will be expected by T90. So if it is T90, which means the time period will reduce by almost half. So the value will have only 40 to 45 days to submit the report, subject to whatever information available at their end. So that is still a proposal, but yes.
So in that case, won't the appointment timeline reduce?
Possible. Yes, that is also possible.
So that extra time could be available.
Absolutely. That is possible. In fact, I have seen IBC is one of the most actively, I would say, updated or regulated regulation in concerns, if I compare to some other regulations, other acts also. Because recently in February, there were a lot of amendments across all the regulations and act. January, there were a couple of things. Last year, there were amendments. So constantly things are changing. Now, recently, just to share one perspective with all of you, though I'm going a little outside the topic, but they have added outside court settlement situation also, which means this insolvency can be settled outside the court along with this timeline which we are looking on the screen. So they haven't given any specific approach. How do we do in this case which will, I think, come over the period because everything evolves in case of IBC. But if that settlement happened, eventually the valuation perspective also would change over there. So that settlement, I think, will be more in terms of with the corporate debtor and the COC. If they are able to arrive at a specific value and they close the CRP rather than getting into any kind of insolvency or liquidation. So it's very, very interesting space. Constantly it is getting updated. Anybody wants to add anything before I move to specific challenges regarding timelines? Anyone? Okay. So, few of the examples: incomplete information, especially for this thing, availability of data. I think Makaranji highlighted very well. There is always a lack of information. Either it will be old information or it will be incomplete. Books of account are not completed. Balance sheet is not there. Information is not updated till ICD. Okay, so let me ask this. Let's say if you get information about the assets, the balance sheet, and it is not updated till insolvency commencement date, you as a valuer, what approach will you take? Anyone? Any thoughts? So let's take a hypothetical example. The insolvency commencement date is 1st Jan 2024. Okay. And you get the data. Let's say if you are a land and building fixed asset register or any other information, let's say a balance sheet of 31st March 2022. So it is 2 years old. Now, as a valuer, what would you do based on the information given? Or anybody from SFA?
I think we have to disclose that these information received, these are the balance sheet, these are the data received, and on the basis of that, limitations of that, we have came to the conclusions or we have arrived on this value based on the non-availability of the data.
Okay. So the valuation, see, whenever you prepare a valuation report, there are 3 dates which are very, very important. Can anyone tell me which are those dates? There are 3 dates, very important dates, and they should be included in the valuation report. Anyone?
Valuation date.
Correct.
Appointment date.
Correct.
And third one.
Inspection date.
Inspection. So I am from SFA. I'm from SFA. I think we do not include any inspection date.
Inspection.
Inspection date.
Inspection. Okay. So that's an additional date in that case. But there are 3 dates which are specifically prescribed as per the Companies Act valuation rules. So as rightly said, one is a date of appointment, second is a date of valuation, and third is a date of valuation report, on which date you actually publish your report.
Correct.
So now in this hypothetical example, if 1st Jan 2024 is insolvency commencement date, so that becomes the valuation date. Valuation as on which date? Maybe you are giving the report in March 2024, that becomes the report date. But you have data till 31st March 2022. Now, the challenge would be that you are providing a value for 1st Jan 24, but you have information on March 22. You don't have any option to bridge the gap, right? So ultimately, in my view, what we should do is that the valuation is provided for a valuation date as of 1st Jan 2024. But it's important to note that the information available is only till 31st March 22, and it is assumed that there is no further changes in the expected activity of the business. And if there are changes, these changes are not given or the information is not shared while preparing the valuation report. So please remember CLD. I hope you all know what is CLD. Anyone not knowing what is CLD as far as valuation is concerned? So
No,
can
I
I
don't know
take this side?
what is CLD.
Okay. Let me see if anybody knows. Maybe somebody from the audience can help. Anyone knows what is CLD?
Caveat limitation.
Absolutely right. So as Satish rightly said, caveat, limitation, and disclosure. So there is a very specific write-up given by IBVI. If I'm not wrong, this was published somewhere in 2021 September. You can check in the IBVI website, or maybe I can share this with along the presentation. Very, very important. This is something which will save you as a valuer. So protect you in terms of what information you have been given, on what basis you have made those assumptions, why you have selected a particular approach, and then how did you arrive at the value? What all documents, information was available with you? So all these things should be covered in the CLD. In fact, if you look at that CLD, by asset class, they have given very specific situations also. So if I take an example of land and building, now as a valuer for land and building, you're not supposed to go and check whether the land belongs, whether those documents shared by the RP are actually legit. Can I request, if you're not talking, please put a line on mute? Okay, thank you. So you're not going to audit the documents. You will take the documents what you have been received. So please always ensure that in your valuation report, CLD is a very important section, and you should spend time on that. This is what will protect you in the court of law also, and when you are in terms of if there is any disciplinary case against IBBI, you can justify that. Okay, lack of accuracy, authenticity, I think incomplete information would cover that aspect also. So when I say authenticity is that at least I faced this situation where the information as the RPI was giving to the valuer, it was not authentic information. So it was a false information, which I came to know later after the RV told me. So those all things are very, very important. Section 92, which I already covered, that most of the cases, the ex-management, they do not support the RP. So in this case, the law provides that the RP can always approach the educating authority and file an application of non-cooperation under section 19(2). So this eventually helps the RP, but I think as a RV, you should be aware about this. Ultimately, you can also, and there is no harm if you can also add it into one of your valuation report that as discussed with the RP, there is no much data available, and RP has also filed an application under section 92 for non-cooperation. So this adds an additional perspective in your report saying that you had asked this information from the RP. RP wanted to share this information, but RP is also having certain limitation, and to cover that, he has filed an application with NCLT. Timely submission of the qualitative valuation report, I think we discussed this. So which is eventually 80 to 75 days will be available to the RV under various situations of liquidation, and but this becomes challenging. I think Makaranji highlighted very well that when he got additional information, so maybe in a short span, he was expected to turn around with a new methodology and change the entire valuation. Okay, now some of the suggestive tips to the RVs. One is valuation is a continuous process, hence continuous coordination between the IRP and RP is required. Now, what exactly I'm trying to tell you over here? Let me give my personal example. So when I was doing an insolvency case, I had filed an application under section 19(2). I had very limited information, but we appointed the valuers. Whatever information available that was like 3-4 year old, I gave all that information to the RVs. And as and when the information was available, we were always in touch. I was sharing with them. And every 2 weeks, 3 weeks, there was a discussion whether whatever information has been gathered, or if they would like to make a physical visit, or if they would like to make any specific assumption. So there was a continuous dialogue between the RP and the RP. So this helped a lot. And as we were able to complete the books of account for last 3 years, 4 years, I started sharing the provisional unaudited balance sheet with him. So that also helped him. So this is how I think the process should be continuous. So once you're appointed, make sure that you are in touch with the IRP, RP, if there is any additional information which has been available. Sometimes RP also has a tendency to forget if they have to share with the valuer. So I would suggest you can take, as a RP, you can take that charge and be in touch with them. So this will be good for both the sides. Now, understanding the asset applicable regulation, purpose of valuation, I think this is very straightforward. I'll just repeat what I said in one of the previous slides, that if you are doing valuation for liquidation, please do understand what is the purpose, whether you need to do the valuation for all the cases. As I said, it could be liquidation in parcels, going concern, selling as a corporate debtor as a whole. So these all things should be taken into account. So once you understand the purpose, right, what is the objective and regulation, so accordingly you can ask for the data, number one, and you can provide your valuation. Are we to ensure appropriate CLDs, so which we just discussed, caveat, limitation, disclosure are mentioned in the report. For example, if you are not able to do physical inspection, so this happened with me. Now, as per the balance sheet, there were 4 vehicles which were reflecting in the balance sheet. Now, when the plant and machinery valuer visited the site, we could see only 2 vehicles. So the obvious question was, where are the other 2 vehicles? So I went back to the ex-promoter. It took a lot of time for him to give the information. Then we went to approach, as a RP, I had to approach all the banks to get the bank statements. And then I learned that after the company got closed, after 2 years, they had sold 2 of the vehicles, and the sale transaction was reflecting in the bank statement. So I was able to provide this information to the RV, that based on this, now though the book says 4 vehicles, but you have physically inspected 2, but please note that these 2 vehicles have already been sold. Accordingly, he was able to put it on the report that he could see only 2 vehicles, and as per the information, 4, but 2 vehicles have been sold before the CRP period. So these things make a lot of sense. Ask for data to be clear and exhaustive. Now, for your information, what I have done is I have created an annexure. This annexure, if you see here, this would have a very broad idea. This is not exhaustive, but a very broad idea about whenever you ask for information. So honestly speaking, some of the RVs, when they ask for information, they just give 3-4 liners, please share whatever information available to us. But please don't do that. Be very specific, create a checklist, give this checklist to the RP, to the liquidator. Let them check each and every information which you asked for. And if you haven't received, make sure that you document it. And it is very well documented in your email also, and it is part of your reports also. So some of the information which I think is important is memorandum of association, articles, annual reports for past 3 years, audited, profile, project report, valuation report. Now, the law also has changed that if there was any valuation done, let's say if you're in liquidation, there was any valuation done during CRP, so that valuation report should be shared. Maybe you can also ask for that from the RP or the liquidator. Also, if once the CRP starts, there could be some valuation might have done by COC. They try to do some due diligence before getting into insolvency, but it's possible to find a buyer. So there is some valuation which they also do at their end. So you can ask for that information because that might have some inputs which would be useful for your valuation. Compliance, projections. Then specific to asset classes, this is for land and building, plant and machinery. So fixed asset register. In fact, in one of the previous session when I was discussing this point, somebody made a very interesting comment that now there is a new market practice where I think the plant and machinery or the land and building, they provide an additional service. This service basically means that they can actually do an inspection of the site and provide the details of all the assets. I'm not able to recollect that name of the report, but it was like a due diligence. this will be over and above valuation. So once, rather than depending on the fixed asset register, there will be a additional exercise done by the RP liquidator, a point and valuer, who can provide these services. So if there is a big plant, they will not look at each and every asset within the plant, but at least they will be able to give the broad perspective. These are the assets which are as per physical inspection. And if this report is available, given to the valuer, then it makes a lot of sense, and you can also cross-check with the information available in the balance sheet. Is anyone aware about this market practice? I am not able to recollect that name of the report, but has anyone come across that? Anybody? Okay.
ये मैंडेटरी होता है कि आपको फिजिकल इंस्पेक्शन करना ही करना है?
100% करना है उमेश जी, आप लॉ में लिखा हुआ है आप फिजिकल इंस्पेक्शन. सॉरी उमेश जी, आपकी आवाज नहीं आ रही है. आई एम नॉट एबल टू हियर यू क्लियरली.
क्लॉज दे सकते हैं आप मुझे, if पॉसिबल हो तो.
सॉरी, क्या दे सकते हैं?
जिस लॉ में ये लिखा हुआ है कि आपको 100% उसका इंस्पेक्शन करना ही करना है.
फिजिकल इंस्पेक्शन आप लैंड एंड बिल्डिंग से या प्लांट एंड मशीनरी से या एसएफए? सॉरी, आई एम नॉट एबल टू हियर उमेश जी.
लैंड एंड बिल्डिंग सर.
लैंड एंड बिल्डिंग ना?
जी सर.
तो लैंड एंड बिल्डिंग में अगर आप वैल्यूएशन करेंगे बिना फिजिकल विजिट तो आप कर ही नहीं पाएंगे. एंड इफ यू वांट टू सी द लॉ, लेट मी सी इफ आई हैव इट ओपन.
नहीं, किसी लॉ के तहत लिखा होगा सर ये, आईबीबीआई में.
आईबीसी में लिखा होगा.
आईबीसी में
as per yes as per IBC it is very clearly stated that the valuer has to do a physical inspection. और land and building, plant and machinery में तो without physical inspection तो you cannot submit a report. In fact जब हम लोग वहां पे विजिट के लिए गए थे तो the valuers, can I request, अगर आप बात नहीं करें तो can you please put a line on mute please? Okay. So वहां पे उमेश जी, when we visited the site, वहां पे तो the valuers they take a photograph, they take a video. In fact, they took a photograph along with me that I was also part of the visit, along with the assets also, and those photographs are also part of the valuation report. So physical inspection is inevitable as far as land and building and plant and machinery is concerned. As far as SFA is concerned, if there is a valuation of inventory, yes, physical inspection again becomes inevitable. I hope that answers your question, Umesh ji. Okay. So these are some of the list which you should always ensure that you ask the RP. Maybe he is not able to share all the information, but at least you should provide this list and according as a checklist to ensure that what all information you have gathered. So I've covered few of the assets like capital, work in progress, intangibles, contingent liability, and so on. Maybe some of you might be having a better list. Okay. So before we move to the next topic, anybody wants to add anything? Anyone?
Sir, as we discussed in this authenticity, that we have to not authenticate the documents, we have to just follow. But in some cases, I have know that these documents have some issues.
1 second, Makhan ji. Kaushal ji, can you please put your line on mute? Thank you. Yeah, sorry, Makhan ji, please.
Yeah, in some cases, I have seen that the information I have received that there is some issue with the documents with sanctions or related things. Is my have I should I inform this or shall I just depend on whatever I have received?
If it is very apparent from the document that it is not authentic, let's say for example, right? You should always write an email to the RP stating that the documents which I have received, I'm assuming that these all are authentic documents unless stated otherwise. just write the email, close it, number one. Second, in your valuation report, in the CLD section, make it very clear that you haven't verified any documents for its authenticity. You have assumed that they are authentic, and you also shared the same with the person who is appointed you.
One more thing, I've faced an issue that now I had 3 properties which I had to value, but on site I could not find third property. The office was on paper, they had everything in their balance sheet, but physically that office was not available. It was just on paper, but I had to value that. So I had informed that there is no value, and I had just added that email in my annexure in my report. So anything more to be added in this thing, or this is sufficient?
No, that's more than enough. No, that's more than enough. Absolutely fine. So as far as you've added that annexure, and normally in such cases, what I always suggest, and if I am there, what I will do is that as per the balance sheet, these are the 3 properties. When you give the summary, right? So the valuation for the property number 1 is X, property number 2 is Y, property number 3 0, and a note. Please refer to so and so page for the specific comments why this property was not valued, because it's reflecting in the balance sheet, in the books, but you are not able to value. So at least somebody who's reading the valuation report, they would actually look at, okay, there were 3 properties, but one has not been valued, and there is a specific note for that particular property. So they can go to the note and read it. So you are very clear that you are going with the books and giving what you have seen or what you have known about it. Anybody else? Okay. Now, I would need your help, all of you, that there are specific assets. Now, my question is that who should be valuing these assets, which means which asset class are we, and what should be the valuation approach? So this is slightly, because some of them would be straightforward, but I find little tricky. So let's go one by one. Inventory. This is one of my favorite questions. And every time I ask this, I get a very interesting answers. So all of you, please share your views. What should be the, which RV should do the valuation for the inventory?
SFA, sir.
SFA, okay. One is SFA. Yes, Obirji?
SFA, sir.
Okay. Let me see what are the other views. So far, 2 of them are saying SFA.
But basically, that could be under what inventory is it? It could, if it is machine related, it could be in plant and machine. What inventory are we looking for? It will depend on that.
Correct. So, for example, if somebody has been appointed as a valuer for, let's say, Maruti, the inventory would be unfinished goods, raw material, and the cars.
That would be plant and machine.
Plant and machine. Correct. Anybody with a different view?
Sir, it will depend on the type of inventory.
Correct.
Like it is plant and machinery, buildings, or product.
Correct.
And even
now,
like shares.
Correct. Now let me put a very different example over here. Hypothetical situation. So there is a Kaushalji, can I please request for your line on mute? Kaushalji, are you trying to say something? I mean, okay. So let's say if you are not able to define whether the asset falls under land and building or plant and machinery or SFA, then who would do the valuation? Anyone?
SFA is the best person to value because all the 3 type of things will reflect in SFA. category.
Absolutely right. So your good name?
I am Rajkumar Sarda.
Acha. So Rajkumar ji, absolutely right. Whatever doesn't falls in the bucket of land and building or P&M, by default, SFA will have to do the valuation as far as inventory is concerned. But as most of them rightly said, that depending on what type of asset, if it is land and building, then it would be done by, if it is a physical, a tangible asset, it will be done by the land and building or the plant and machinery. And if it is an intangible asset, it will be done by the SFA. Now, approach will obviously depend on type of the asset. So nature of the business is very important. Like we took an example of a real estate or maybe like asset being valued, real estate or Maruti. So in such cases, you'll have to look at these type of asset and the business. Okay, so there are some comments coming on the chat also. Sorry, I missed those comments. Varunji, P&M, then Chandrasekhanji, SFA. Okay, okay. Thanks to all of you for sharing your inputs. Let's look at the another asset. Jewelry, diamond, painting, and artifacts. Who will do the valuation?
The new class gold valuer.
There is no class as gold valuer. At least as per IBVI. Varunji is saying SFA. Okay. Varunji, do you think painting, artifacts, diamond can be valued by an SFA? Special valuer shall be hired. Okay, good point. Anybody else?
Goldsmith. Sir, finally, we can take reports from specific who are specialized in these things, and SFA can add those things in his report. Finally, assemble them and add in his reports.
Absolutely right. So then why SFA over here? If you're going to take a view from an expert, correct? Then why do you need SFA? It can be land and building or P&M also.
Actually, the SFA can compare those in balance sheet and might be look into some details, missing details or values added in the balance sheet.
Okay, okay. Fair point. But again, this is slightly a gray area. And as Makaranji, Chandrasekhanji, Satish Kumarji rightly said, yes, we would be requiring an expert over here who specifically, I think others also mentioned this, who specifically deals in these kind of assets. Now, one thing which I personally think that SFA, yes, obviously, as I said, whatever doesn't falls in the buckets of P&M or land and building, it comes under SFA. But in these cases, I have seen some situations where what happened is there was a big office which was supposed to be valued. And within the office, there were a lot of paintings and artifacts. So now there was a discussion who will do the valuation. So then the discussion happened in such a way that now these painting artifacts are part of the furniture, correct? Because they are movable. So who's valuing the furniture? It is the plant and machinery. So then there was a discussion with the RP that, okay, why plant and machinery should do the valuation? SFA and SFA can do it. Finally, when we were looking at the overall assets, since it was part of the furniture, it went to plant and machinery. Had it gone to SFA, the approach would have been same. What we did over here as a liquidator, we appointed an expert who only deals in paintings and artifacts. So that expert helped us to provide the entire inventory. There was no information available, obviously, with the corporate data. So what is the age of that particular painting? Whether it is a canvas painting or it is an oil painting, what is the size of the painting? Who is the painter? Because normally the painters give a signature at the end. So if you're able to identify who is the painter, how long the painter has been doing these paintings, because the older the painter, the higher the value, and so on. So once that information was gathered, this was given to plant and machinery. There was a call with the plant and machinery valuer and the expert, and based on that, the inputs were shared and the report was published. So ultimately, you would need an expert in such cases. Now, the question is, do you need a government approval, a government approved valuer? Do you need a expert who's approved by the government?
Not necessarily. He could be just an expert in those things and he can provide his views on it. Because I don't know, but might be all such field doesn't have any approved valuer. Might be.
Correct.
Sir, under section 34 there is a different category.
And what is that category?
Specialist category, the land and building, plant and machinery is a different category for the specialist jewelry and art.
Section 34. And section 34 of which act?
सेक्शन 34 में जो इनकम टैक्स डिपार्टमेंट जो वैल्यूअर अपॉइंट होते हैं उसमें इसकी कैटेगरी स्पेसिफाइड है.
ओके ओके ओके, अंडरस्टूड. तो वो शायद इनकम टैक्स रिलेटेड होगा. यहाँ पे एज फार एज आईबीसी इज कंसर्न, so there will be
यहाँ तीन ही कैटेगरी है, वहाँ डिफरेंट 8+ कैटेगरी है वैल्यूअर की.
Correct. Okay, this was good discussion. Market approach, obviously. Under construction project real estate, I think very obvious. Land and building, right? Disputed GST input tax credit. This also is a no-brainer. It's a disputed GST ITC. No inputs.
SFA.
Yeah, absolutely right. SFA. See, it is not a tangible asset at all. So this will be under SFA. Chandrasekhan ji also said SFA. Yeah, I think Satish Kumar ji also said SFA. Okay. Now, let's look at some practical challenges. During the valuation, can IRP, RP, COC challenge or question the valuation methodology approach? Why that assumption? Or maybe why the liquidation value is taken as a percent? Sorry, that is not FC, it is FE. My bad, there's a typo. Why liquidation value has been taken as a percentage of fair value? Can they do that? So I will just go back to what Gopalji had asked some time ago, and this is in line with that question. So please share your thoughts. Though I partly answered it, but yes, Makranji.
This is always a part of discussion during our draft reports, that why this methodology or what kind of approach we are going with. So this question is arise in each and every report.
So then, do you face the COC or it is only with the RP?
Only with the RP.
Okay. Anyone who has faced a situation where COC has asked? I am aware about some situation where NCLT has called the valuer. Let me see if I can get that case law. It was Mumbai bench 2021, if I'm not wrong, 22. NCLT did not accept the valuation report. Why? Because it was without any specific assumption. The basis was not clear. The methodology was not highlighted clearly. and it says that the valuer needs to revisit the valuation, or maybe the RP can appoint another valuer with approval of the COC. So it is very, very important that your approach, your methodology could be challenged. Now, let me share some thoughts over here. These are as recent as 12th February and 15th February. So there was an amendment on CRP regulation, which is day before yesterday. It says very clearly that there is a new provision which has added to regulation 35(1)(a). The resolution professional shall facilitate a meeting with the RV and which shall explain the methodology being adopted to arrive at valuation to the members of the COC before computation of estimates. Which means now when you get appointed under CRP, the RP will actually facilitate a meeting, and probably what I think is, maybe if the approach is different, but if it is a committee, then you would be joining the COC for that specific meeting, and you will be able to discuss what methodology and approach you should adopt. So any thoughts on this? So this is as recent as 2 days ago, but anybody has any thoughts on this? Let's say, for example, if you have been called to a COC meeting, hypothetical example, and if you have to do a valuation, let's say, for example, it is land and building, or maybe in any plant and machinery asset, or any SFA asset. What approach will you take? Imagine you're sitting in front of the COC discussing the methodology. Any thoughts, inputs?
This meeting would be after visiting the property in land and building case, visiting the property and studying the cases. We can provide all the details on basic. We can give and guide, underline things, what approach we are going for.
Correct. Correct. Absolutely right. Correct. Any more thoughts? Okay, so I'll share my perspective, and I will add to what Makaranji just mentioned. Let's say if I'm being asked to come to a COC and then share what the way I'm going to do the valuation. First is I will highlight I'll make a simple presentation of 5 to 10 slides max, which I can cover in the max 10 to 15 minutes period. First thing which I'll highlight when I was appointed, number 1, what all information I have at this point in time. Number 2, whether I have done physical inspection or not, and what are my observations based on physical inspection. So first I'll create the background and the base, right? And then I will say, this is the approach and methodology. Maybe I'm going to choose a market approach. If it is market approach, I'm going to use the transition which has like land and building. So in the vicinity, there were certain other projects which are in a similar nature. Let's say that is the affordable housing. So there are 3 other projects which are on the same category. And I know this is a rate which is currently prevailing over there. Now the property talks about, one is a completed project, under construction project. So under construction project, I understand that this would require a cost to complete, correct? So this is what I envisage as cost to complete. And based on the market approach, this is what the valuation would be, subject to this information is not available, this is not available, this is what I'm assuming, and so on. I'll make a very simple presentation. I'll ensure that COC understand the entire valuation in 15 minutes. I'm not going to give a number. I will not give a number because this is just to explain the methodology. And in this case, what I will highlight is, very importantly, that I had done a valuation for some other projects of a similar nature, and this is the approach I have followed. Because, see, please remember, when you are sitting in front of a COC, they could be your potential customers. Eventually, take this as an opportunity. The more professional you are in your approach, eventually next time they will remember you, and they might prefer that, okay, why don't you appoint this specific valuer for land and building, or maybe for plant and machinery or SFA. So my strong suggestion would be, please ensure that you spend good time do the due diligence and present it COC. And maybe it is a good practice, discuss with the RP before going to the COC. That will also give you some additional perspective. Maybe RP will be able to give you some additional inputs. So these are my suggestions. Anybody, any thoughts, anything you want to add?
Prakashji, I want to ask one question. Like there are PUFE transactions in IBC cases. What approach should be taken for these transactions? Like everything is contingent as of now, you know. There are only court cases against the erstwhile directors, and nothing else is no else information is available. What should we do in that cases?
Ankush, I'm assuming you're a SFA valuer. Am I correct?
Yes, I am an SFA valuer.
Okay. So first thing is, as far as this PUFE transaction are concerned, which means, correct me if I'm wrong, right now they are still undergoing the process of the order being passed by NCLT. There is no order from NCLT. Am I correct?
Yes. Right.
Okay. Next is there would be certain litigations which are going on. So for example, within PUFE, there are 4 categories. I'll assume it's a fraud, F, right? So within fraud, the X amount which the X management has to replenish back to the corporate debtor. Now, there would be a transaction audit report or a forensic audit report which I've got conducted. So that is one of the very important inputs which you should have, because ultimately, whenever RP files an PUFE application with NCLT, that is always backed with this forensic audit report or a transaction audit report. So if you have to do a valuation, you have to first get handle of those details. Number 1. Second, if there is any specific litigation, so if there is a property or there is any kind of an investment which is under litigation, that litigation would be undergoing through some kind of an advocate. So what you should demand is that I would like to have a confirmation from the advocate, what are the chances of winning the case. So there is always a probability. Now you can always use that probability to arrive at a value. So for example, if there is an investment which is disputed and that is currently undergoing litigation, so if the advocate is ready to share that there is a 50% chance that the corporate debtor will actually win that case, which means if it is for 100, 50% chance the value comes to 50, number 1. Okay. Then the next information they will share, this will take at least 3 to 5 years. So you can take into account the time value of money also, right? And also there is a chance that once the corporate debtor or the ex-management wins that case, they get that 50 into hand. They should be able to give this back to the corporate debtor. So that probability also should be there. So you have to just put these assumptions based on that information and provide the value. This is what I would suggest. I hope that helps, Ankush.
Thank you.
No problem. I think there were some points on chat. Chandrasekhar ji saying, I think they cannot challenge. RV is providing the reason. Chandrasekhar ji, they can't challenge, but they can question. And if the RV is not able to justify, then definitely they can challenge. And please note that COC, RP, though nobody would do that, but still there are cases which have come across where because RV is trying to act that he is very independent without understanding the perspective of the COC may approach IBBI also against the RV.
Okay, sir.
So again, I'll make my point very clear. Please stick to your stand. Please be professional. There is no doubt about it. If you are very sure what approach you have taken, methodology you have considered is correct, please stick to that. There is no need to budge as far as per the expectation of the COC and the RP.
Okay,
but
sir.
You should be able to justify that.
Okay,
is
sir.
that clear?
Okay, sir.
Yeah. Next point which you have mentioned, land and building valuer shall think of all approaches and select the most appropriate approach. Very right point, Chandrasekhar ji, and this is very clearly mentioned in the law. In fact, if you look at valuation rules, each valuer will have to consider all the three approaches and select one or more. And when in your report, you have to specifically write, you have considered cost approach, market approach, income approach, but you have decided to go with market approach. Why? Justify. So considering all the approaches inevitable. I hope that answers your question, Chandrasekhar ji.
Yes, sir. Yes, sir. Thank you, sir.
No problem. Okay, so moving on, another amendment in liquidation, which is as recent as 12th of February. This also partly I have covered, but I'll just highlight it again. It says that Regulation 35(5), this is a new sub-regulation 5 which they have added, where valuation is undertaken as per IBBI liquidation regulation under Regulation 35, sub-regulation 2. Now, what is this 35(2)? This is fresh valuation during liquidation. So what I'd mentioned is that, for example, if liquidator decides that he will continue with the same valuation as it was done in CRP, there is no fresh valuation. But if under Regulation 35(2) he decides for a fresh valuation, then this sub-regulation 5 gets applicable. Now, what exactly it says? It says the liquidator shall facilitate a meeting wherein registered valuer shall explain the methodology being adopted to arrive at valuation to the consultation committee before finalization of the valuation reports. Same thing under CRP, but this is under liquidation. Now, another sub-regulation 7. This is important. In case there is a deviation of 25%, see, please note that the liquidator has decided for a fresh valuation. So now what is happening is let's take land and building. So there were 2 reports of land and building done under CRP. Now liquidator has appointed another 2 valuers of land and building in liquidation. So total 4 valuation reports, right? In CRP, it will be average of the 2. In liquidation, it will be average of 2. So now we have 2 values from these 4 reports. But if the deviation is more than 25% or 25% to the least, the liquidator shall facilitate a meeting with a registered valuer to explain the reason of the difference to the consultation committee. So this becomes very, very important, which means, let's take, if this is a situation, out of 4 reports, we got 2 values. One is under CRP, one is under liquidation. Now, there is a difference of 25% at an asset class level, land and building, not a specific asset, land and building, which means all the 4 valuers would require to meet. They will have to understand, explain the RP, and then liquidator. And the liquidator will actually is going to ask these 2 new liquidators, new RVs under liquidation to explain why there is a difference. So this is very, very important. Any questions, thoughts on this? Anyone? Okay. I'll just reiterate what Chandrasekhar ji was asking, and I said that RV should demonstrate independent and professional judgment with respect to the basis and reasoning of the assumption. So this is very important, and stick to your valuation. Okay, I came across this situation. I want to know what are the views here of the audience. What if the RV says that the valuation reports from 2 valuers was deviating more than 25%. So now the RP has an option to appoint a 3rd valuer. Now you as a valuer, you come to know that now RP is appointing a 3rd valuer. What should you do? Anyone? Which means your report is not accepted. Your or other RV's report. Yes, Omvir ji.
2 valuers के बीच में की values में बहुत ज़्यादा change है, काफी changes है, more than 10 to 15%. तो 3rd valuer को intervene करना पड़ेगा.
करेक्ट. आरपी के पास ऑप्शन है 3rd वैल्यू को लेकर, कम से कम 25% का डिफरेंस होना चाहिए, तो ही 3rd वैल्यू पॉइंट. तो मेरा सवाल ये है उमेश जी कि जब आपको पता चलता है कि आरपी 3rd वैल्यू पॉइंट करता है, यानी आपकी रिपोर्ट जो है उसको और एक RV लेकर आ रहा है पिक्चर में, तो what should you do?
Nothing, sir. Let them happen.
Okay, so that is one option. Yeah, no problem. Anybody else?
Sir, we could have a meeting with two RVs and both can justify their point of view, and then at least we could get someone is has better point than the other, at least in those two valuer.
Okay, fair point. Absolutely
Sir,
fair.
Please.
Yeah, please go ahead.
I will initially go through in detail with both the valuations, one prepared by me and one by the another valuer, and see the methodology and the inputs used. Then only I will finalize if my valuation is realistic.
Do you think RP will share with you the report of other valuer?
I don't know about that.
They can't.
Okay.
Then what will you do? Sorry, I missed your good name.
Rajkumar Sarda.
Rajkumar ji, yes. So what will you do, Rajkumar ji?
Then the only procedure will be to recheck my own valuation.
Okay. Interesting. Good points, all of you. Anybody else? So my first point here, there is one message on the chat. Let me check. RV cannot do anything. Chandrasekhar ji. Okay, this is one of the options. So my first point is, see, if I am the RV and the RP comes and says that now we are appointing a third valuer for your specific asset class because there is a lot of deviation between your and others' report. So Rajkumar ji, Makaran ji has rightly said that we need to understand this. Now to understand, obviously you will say, okay, share me the report of the other RV, which was not possible. So what I did as a RP, I went on a call where I said to both the RVs that now RP and two RVs are doing a call together. Okay, we will not be discussing about the numbers. We will not be sharing the reports, but we are only discussing the methodology. So the biggest difference was in land and building. So this is an under construction project. Now under construction project has 24 buildings. Out of 24 buildings, there are 10 buildings which are at the completion stage of around 25%. So this is where the valuation is deviating because I am as a RP privy to both the reports. So I can see the deviation. So this is where so now I want you to explain what is the methodology you have taken. Let both of them explain and let's discuss. Maybe there is a possibility that one RP would say, okay, so maybe I will have to reconsider my approach. Maybe. Or they can stick to their approach also, which is absolutely fine. So the RP is not challenging the methodology, but RP is creating a platform to discuss with both the RVs whether there can be some gap in understanding of the approach. And trust me, there was a gap in the understanding of one of the RV's approach. He had to revise the report, and the difference of 25% came to only 13 to 14%, which was absolutely fair. I avoided by appointing the third RV. So this saved both the RVs because eventually, in my view, it is a reputational risk to some extent. COC would always say that इसने इतना ज़्यादा valuation क्यों दिया या इसने इतना कम valuation क्यों दिया? Because see, always remember, most of the times COC has a fair idea about the valuation. Most of the times. So they will be able to judge it also. Now, if you have to appoint a third RV, you have to go back to the COC, take an approval. Again, there is an additional cost. And if the company is already under insolvency, why should we delay it further? Appoint a third RV, entail more cost. So that was my perspective. And eventually this meeting helped. And I'm thankful to both the RVs. They were absolutely professional. Absolutely. We discussed only the approach and we were able to come at an amicable solution and then we resolved it. So my suggestion would be that you should always discuss, understand. If you think that your approach is fine, please stick to it. Let me see what are the sir. Ask everybody to mute. Omriji, if you can just mute your line, please, if you're not speaking. Anybody else who is not speaking, please put your line on mute. Okay. Anybody has any counter thoughts on my suggestion? I'm absolutely more than happy to discuss or agree or disagree. Absolutely fine. Anyone? Does it make sense? Okay. Understand the reason and take a decision based on his or her professional judgment. Now, what if IRB/RP suggests to provide a nil valuation due to CD is inactive or different company? What would you do? So RP says, अरे कंपनी तो बंद हो गई, ये कंपनी है ही नहीं, आप क्या करोगे वैल्यूएशन करके? आप एक वैल्यूएशन रिपोर्ट बना लो and just say zero value and finish it. What would you do? Would you do this? What RP is suggesting? Anyone? No.
Correct. Cannot say it as zero. Each and something it might have some value. We need to study
Absolutely.
things and then value accordingly whatever approach we are going for. We cannot just directly define it as zero.
Absolutely. Absolutely. Because ultimately it is an independent professional judgment by the RV. So you can't put in your report because RP told me the company is inactive, defunct, and I'm giving nil value. No, you have to prove that you have checked this and then you have provided the value. Elaborative CLD incorporated in the report is crucial and safeguards the RV. I think this we have discussed in detail. What if there is an increase in scope of work after the appointment? What will you do? पहले बोला था इतना काम है और अब काम बढ़ गया है. Then what will you do? And this happens in IBC. Land and building value cannot give nil. Right, Chandrasekhar ji? Is there no right then zero value? Okay, fair.
I really don't know about this thing because I have faced change in scope of work many a times. So I'm
sure many of you would have faced this.
Yes, so I'm not sure what we should go with that.
No problem.
Should we
We'll discuss
deal
that. No problem. We'll discuss that. Let's see what others have to say. Satish ji, Omri ji, Chandrasekhar ji, Rajkumar ji. I remember your names because you guys are most active. So that is where I'm calling, but others are also open to speak up.
If the scope is increased, then we shall charge the higher fees according to
Absolutely.
Yes.
जितना काम उतना पैसा.
हाँ.
But क्या हो जाता है सतीश कुमार जी? Usually, this is where RVs need to be little smart, in my view. Whenever you are signing an engagement letter, the first thing define the scope. That engagement letter has to be signed by the RP, the liquidator, or whoever is appointing. Number one. Second, in the engagement letter, make sure to write a point if there is a change in scope, increase in scope. This would be discussed with the person appointing, and accordingly the fees will be discussed. So make sure that you put that point in the engagement letter itself. Number one. Second, when the scope increases, immediately you should highlight this to the person who is appointed and discuss with it. Unless if there is an additional document which is created along with the engagement letter to ensure that your additional fees is taken care of, you should not engage in the additional scope of work. You should put your foot down. This is what I would suggest. If anybody has any other suggestion, absolutely fine. Professional fees are revised. Yes, and this should be part of your engagement also. काफी बार क्या होता है कि whenever in some cases, obviously, if you think that there would be additional scope which will eventually give you more exposure, But let's say sometimes it's not always the money which is important, but maybe it is the exposure. Maybe you are a little more futuristic. You think that, okay, let me give some more help to the RP liquidator. This eventually might help me to get more work in future also. So that's your professional call, which is absolutely fine. But I would still insist that please ensure that even if you're not charging for the additional scope of work, you should always give that perspective to the RP or whoever is appointing that this was the additional work which was done along with the scope of work earlier defined. Though there was no fees charge, let it get documented also. There is no harm in giving just perspective this to the person who is appointed. Value should keep a provision for discussion engagement letter discussed with the RP after the increased scope of additional fees subject to approval of COC. Please remember one important thing here. You as a valuer can be appointed by the RP without COC approval, but your fees cannot be given to you without COC approval. So understand that difference. If I am the RP, I can appoint you. You will think that, okay, I'm appointed, it's done. But your fee should be approved by the COC. So it's always a good practice to check with the RP whether your fees is approved or not. He has to get it approved. Otherwise, there is no point in appointing also. But it's always a good practice to keep that check. So increase in scope of work will eventually need COC approval also. So remember that. Okay, so I think we have only 7 minutes left. I'll try to see how best I can cover. Should you issue a draft report before the final report? Thoughts, please. Gopalji is saying yes. Okay. Is it mandatory?
It is not mandatory, but we should share it.
Okay. Sunilji is saying yes.
No.
Anybody thinks you should not? It is better. Okay. Shatishji, you said no?
Yes.
Okay. Why so?
Because in the system, if we are giving draft report, in between they can change the RV also, register valuer, after seeing our valuation.
They can't change the RV after the draft report. It is not possible because ultimately appointing another valuer entails a cost, time, process. So that cannot be done. So my suggestion would be yes, it's a very good market practice. And I think Makaranji in some of the previous examples had highlighted that when he shared the report, he got more information and then eventually the methodology changed. So in one of my case where as a RV, I was doing a SFA value, I was appointed as a SFA valuer for IBC case. There were a lot of information which was not available to me. And this is in line with what we are discussing with Makaranji. So I made it very clearly that based on the information given by the RP, this is the valuer in my notes. Trust me, after the draft report, I started getting all the information. And the numbers changed. So the draft report, sharing a draft report is always good. Let another professional brother or sister know that you are giving a value basis certain information assumption. So it is always a good practice. And this should be included in engagement letter because usually what happens is, again, it's a practice. Practically, it might be different. You can say that you will be expecting a fees of 50% after appointment, another 25% after draft, and the balance after the final. So again, the engagement letter also highlights that perspective that you would be sharing a draft letter. Has anybody come across this situation where you've been asked to do valuation of property not owned by the corporate debtor? This happens, by the way. इतना बड़ा प्रोजेक्ट है, किसकी प्रॉपर्टी है पता नहीं चलेगा और आपने वैल्यूएशन कर दिया है.
सर ऐसा किया नहीं है पर ऐसा पॉसिबल हुआ है.
आपको मतलब पता चला ऐसा हुआ है ना?
हाँ सर. प्रॉपर्टी मिल नहीं रही, 3 साल
तो
बाद।
फिर मतलब वर यू इन्वॉल्व उमेश जी, और किसी और के थ्रू आपको पता चला है?
केस था सर ये।
तो आपको पता है उन्होंने क्या एक्शन लिया एज अ आरवी? अगर उन्होंने एक प्रॉपर्टी वो वैल्यू की है जो उमेश जी, आपकी आवाज नहीं आ रही है ठीक से।
सर ये बैंक का केस था।
ओके, तो आरवी ने क्या अप्रोच ली? आरवी ने क्या अप्रोच ली यहाँ पर?
नहीं सर, आरबी का नहीं था, बैंक का केस था सर, ये बैंक लोन
अच्छा,
का।
बैंक का केस था, सॉरी सॉरी, ओके ओके, अंडरस्टूड। नहीं, आईबीसी में बिकॉज समटाइम्स द प्रोजेक्ट आर सो लार्ज कि कॉर्पोरेट डेटर को छोड़ के जो पर्सनल गारंटर्स होते हैं, एक्स प्रमोटर्स होते हैं, उनके नाम की प्रॉपर्टी भी वैल्यूएशन हो जाती है। सो एज अ आरवी, प्लीज रिमेंबर।
May I come in?
Yeah, please, who is this?
Myself, Asim. I'm Asim. My plant and machinery value. In one case, I was appointed as a valuer for liquidator and personal guarantor. So I have to value the assets of the personal guarantor also.
So Asim ji, when you were appointed as a valuer for personal guarantor, you must have prepared 2 different reports. Am I correct?
No, incidentally, that personal guarantor has no asset. Actually, that no asset has been shown to me. So finally, I need not to go for that, but appointed for that. That's what I'm saying.
So which means you would have got appointed for 2 different valuation, personal guarantor and corporate debtor. Am I correct?
Right.
Yeah.
However,
Then
both
that
are
is
same. Both are same person.
Then that is fine, as far as these are 2 separate appointments. But if you are being appointed under IBC for corporate debtor, you should be valuing assets only which are belonging to the corporate debtor, not to any other party, which could be personal guarantor, ex-promoter, or whatever. So please remember, this will be against the law if you do the valuation of those properties and include in your valuation report not belonging to corporate debtor. Yeah, sorry, Asim, you were saying something.
No, report should be different.
Correct.
But I may be appointed as a valuer for
Absolutely.
personal
Yeah,
guarantor.
correct.
And that is actually by the order of NCLT only.
Okay, which is fine. So these are 2 separate appointments, 2 separate reports, which is absolutely fine.
Yeah, appointment was the same, but report I'm supposed to do 2 different reports.
Okay. So in this case, you should ensure that these 2 reports are separate, even if the appointment was not same. But in your case, as you said, there was no asset, right?
Few 1 hour back, there was a discussion. I didn't come in that time, like on inventory. So I am the person who got suspended by IBCI for doing inventory valuation. So
okay.
And there was a lot of discussion with IBC chairman now. So what I understood is, because it is a current asset, it has got a lot of other implications like tax and all. And so SFA should do the inventory valuation, and if SFA feel he can appoint a land building plant and machinery valuer.
Understood.
So,
Understood.
But it should be, that was the understanding I got. After that, hard learning actually.
Okay. Interesting. Thanks for sharing. Thank you.
Thank you.
Achha, so one request to all of you, it's already 6 o'clock. Is it okay if we continue for another 5-7 minutes max? Is it okay with everyone?
Yes.
Okay, sir. Please go ahead.
Okay. I'll try to wrap up as soon as possible. So Kajal ji, if you are there, Sarita ji, just give me 5-7 minutes more, please.
No problem, sir.
Okay, thank you. Okay, so this we discuss contravention as per code, even if fees are paid, right? RV fees of such cases would not be part of insolvency resolution process cost. So again, repeating, please ensure if you come across this situation, make 2 separate reports and charge it separately. Even if there is only 1 appointment letter, please make it very clear to the RP. Now, the most important part, let's see what views I get. RV has performed the valuation, but the CRP got stayed or was withdrawn without payment of RV fees. I think वो बोलते हैं ना हिंदी में दुखती रग पे हाथ रखना. I'm sorry for that, but has anyone come across this situation? और फीस के मामले में मैंने सुना है कि आईबीसी में बहुत डिफिकल्ट है, यहाँ तो बहुत लेट मिलती है. तो आई हैव कम टू सम, आई कैन हेल्प यू विद सम रेस्क्यू. लेट्स सी, once I hear from all of you, then I'll share my inputs on this. Anyone?
Can I share my thought?
Yeah, please go ahead.
I'm Mahaladra here. It all depends because I have acted as RV as well as IRP, RP. So one should have a clarity in the terms of appointment letter itself. Because when I'm appointing as a RP and as a liquidator, I used to say RP cannot pay anything for personal liable. However, you will put the best efforts to recover from the CRP account or CD account or from the COC members. So in the event of such, terms and condition is there, and if for which register value is acceptable, then, if it is this type of situation, only option left out is to file IA with NCLT after putting best efforts to collect from without going to the court, actually, without going to the tribunal. So this is what my view on behalf of the RB.
Understood. Yeah, thanks, sir. Yeah, very helpful. Thank you. Yes, Asim ji. Asim ji, you were trying to say, sir? Okay, I think it was. Anybody else? So there is a very important Supreme Court judgment, by the way, and that is a civil appeal. You can see it on the screen. Alok Kaushik, who was the RV, versus Mrs. Bhuvaneshwari Ramanathan and others. So very quickly, the background was that this RV was appointed as a plant and machinery, and he was supposed to do the valuation for approximately 130 to 135 sites across India. And then eventually he was able to complete for 85 sites. Then there was a stay from NCLAT, NCLT and NCLAT. And because of the stay, the RP said that now the fees is due, but you haven't done the complete work. And there were other COC members, one of the banks was there. I'll not put the name over here. So that bank also said that, okay, why should we pay the fees to the RV? Because the CRP has come to the stay. Now there is no valuation required. Eventually CRP has closed. So there is no need for paying the fees. Unfortunately, RP also supported that specific bank. Then this RV went to NCLAT. NCLAT told him, NCLAT gave an order that NCLT under section 60 subsection 2 of IBC has the power to take the call. So NCLT also did not give any specific order. Finally, Mr. Alok went to Supreme Court, and Supreme Court made it very clear that as far as the work is concerned, the work has been completed, number one. His appointment has been approved, number two, by COC, by the RP. His fees has been approved by the COC, and he's able to demonstrate that he has done the work for 85 sites, which means he is liable for that fees. So the fees was finally given to him. So what I want to conclude here is that RV's fees, if the work is performed, appointment is confirmed, COC has approved the fees, will not go anywhere if you are able to demonstrate that you have done the work. So I hope this helps. You can always mention this case also if you come across any such situations. I hope you don't, but still. RV fees are payable if approved by COC and the valuation work is performed.
No, there is a peculiar situation. If I can I interfere here?
Yeah, please. Yes.
Just before you told the draft report to be shared, suppose he completed and shared the draft report, and as per the latest amendment, there should be a consultation committee. For valuation methodology, there is a meeting which you told in the third slide. So in that process, this CRP was cancelled or withdrawn under section 12A. What is the fate of valuer to get the fees? That is a peculiar situation. Work is not completed and valuation report is also not taken on record by either by RP or COC. So that type of situation where RP has almost allotted, RV has almost allotted substantial time for his work, barring for the some observations or feedback or some information. It is pending from RP or COC. So I request you to talk on this point also, which just shared in the previously.
So Alaraji here, correct me if I'm wrong. You said the draft report was already shared, right?
Yeah, you're right.
If draft report was shared, which means the RB has already performed the work, right?
But
so you can very well demonstrate that the work was done. Now, after that, the CRP got stay or it was withdrawn. You can definitely ask for your fees for that. Absolutely.
Yeah, so they will share up to 75% as if we are said like that. Actually,
that is possible. So that can be mutually discussed.
Valuation
between
report
the RP
they may not interested.
Correct.
Anyway, my suggestion to my fellow colleagues for this type of situation, with your permission, I want to share that terms and conditions of because I have faced all these situations differently, both sides, this side and that side. So terms and conditions of appointment may even the draft draft RP, draft report, and committed and conditions be accepted in case clear withdraw cancelled can be paid.
Your voice is breaking, Aladaji. Your voice is breaking. I think you're traveling.
Yes, sir. I'm telling you, repeating again, kindly excuse me. We mentioned the same situation. You have to imagine and mention the same
No, sorry, Aladaji, I'm not able to hear you at all.
Also.
Sorry, so not able to hear you. But maybe what I understood is, I'll just try to. This was something which I mentioned in my previous slide also, that engagement letter should have very specific points that if the draft report is shared, you will be demanding X amount of percentage of fees. So 50% in advance, 25% after draft report. Now coming to your example, if you have already shared the draft report and after that the CRP was withdrawn, you can always demand 75% of the fees. Absolutely within the provisions of the engagement letter or within the law. This is my view. Is that correct, Alaraji? Is that what you also trying to say?
Yes, sir. Exactly. I'm with you.
Okay.
I'm with you.
Okay. Thank you. Okay, so there were some other situations which actually I just thought I will highlight here. Valuation of development rights. I think this will be done by land and building valuer. Related party transactions. Has anybody done any valuation for related party transactions? Okay. So very quickly, please ensure that if there is any specific asset or any transaction which you have come across in the valuation, do mention that in your report if it's a related party transaction. In case if it happens, I haven't come across that, but I just thought I'll highlight here in case if somebody has come across it, or maybe you can share it. Avoidance application. I think Ankushji had brought this point, so we have discussed this. So I'll not discuss this any further. Now, the last slide is opportunities. So I'll just quickly cover this point over here. I think in this case, I just want to highlight that there are multiple opportunities within IBC, which we discuss over here in this slide. You can be appointed as RV in CRP, liquidation, avoidance application, voluntary liquidation, fast track, and so on. So this is something which, this is something which you can foresee that there are opportunities. Some examples or some insights which, based on my experience, I'll share that RBE is always preferred than an independent valuer. Why? Because usually RPs prefer to go to one entity. They can provide valuation for all the asset classes. It becomes very easy to manage. So RVE is definitely preferred. I'm not saying that is this thing, but now what is happening is, if you know that in case of IPs, IPE has been given a lot of autonomy. So now IPE can also act as an IP. So you never know, in future, RVE maybe can also act as a RV for all the asset classes, or maybe one RV for all the asset classes or different asset classes. So that could be the possible future. So RVE is definitely a preference than the independent valuer. Now, geographical location. So I think this is where few of the cities, like for example, Delhi, Mumbai, Kolkata, Ahmedabad, Pune. So what I have seen is that people prefer valuers where they are actually located in that city. So I was appointing a valuer who was located in Chennai. This will entail an additional cost for him to come to Mumbai. There will be additional cost for travel, stay, and so on and so forth. So I always prefer to avoid and prefer a RV who is located in that particular area where the asset is located. So this also becomes a very important point, and you can consider that. Profile is very important because recently when I was looking for a RVE, I saw that people coming to me, 3 RVs putting their CVs together and giving a profile rather than a very good professional profile, which doesn't reflect well. And it was not highlighting the relevant experience of the industry also, which was expected. So I would strongly recommend that if you want to avail of good opportunities within IBC, so please ensure that you have a good profile which reflects your relevant experience also. Empanelment is very important because in one of the cases where I was a consultant, one of the COC members suggested an RV or RVE. So if you are empaneled with that particular financial institution or ARC, you always have an additional advantage. So having said that, this annexure we already discussed. I think I am done with this. So sorry, I have taken additional 13 minutes. If there are any last questions, 1 or 2, we can take it, or maybe we can end the session.
If my voice is feasible or audible to you, I just want to share some thought on the opportunity. Is it okay?
Yeah, please go ahead.
See, there is IBB is maintaining list of empanelments of IPs.
Yeah.
Same situation is not there with RVs, I believe, actually.
Very good point. So who is there from Divya Jyoti now? Kajal ji, you are there? Sarita ji?
So my suggestion is here is we should not wait for the IBBA to create an empanelment, but RVs of each RV can create empanelment of the people, and that empanelment list can be submitted to concerned local NCLT benches. So there is another opportunity. NCLT is also referring sometimes directly to value certain cases wherever the dilemma or where you feel like, just now you told CD assets are not there, peculiar situations will arise during the hearings. So we have to request saying that you please take from this list in alphabetical manner, whatever may be. So crux point is opportunity can be created by RVs also, because IBB maintaining list is again requires regulations amendments, but RVs will have their own independent approach. Maybe their board of directors may approve this list, or they can constitute a separate committee that can be submitted from time to time to local NCLTs, so that way RV service can be extended to the registered valuers, so that registered valuer organization will be more active in this angle with the service. That's what my suggestion, which is mutually benefited for the registered value organization and RVs.
Correct. With all due respect, Alara ji, and with all due respect to all the RVOs, I am just making a very controversial statement, so I apologize in advance. In case of IP, there are only 3 IPAs, right? In case of RVs, there are 16 to 18 RVOs. So more the RVOs, that creates a challenge. So eventually every RVO will prefer to promote their own RVs, and which is absolutely fair. So I think somewhere this consolidation of RVOs, or maybe somewhere there should be a single body which should manage all these RVs. Of course, RVOs can be part of those bodies. IBBI is right now there, but still I feel there is a need for an intermediate. This is my personal view. So that these RVs are taken care of, number one. Second, there should be a very clear-cut, I would say, change in the law that any valuation should be done only by a registered valuer. That's all, which is not the case right now. Except IBC, except FEMA, income tax to some extent, in fact, not even income tax. So there are very limited laws which are actually right now promoting a registered valuer for all valuation work. So I'm looking forward for Valuation Bill 2020, we are setting in 2024. So once, if this bill passes, definitely there will be a lot of opportunities to all of us as RVs. So I hope I was able to add to what you said, Alavaji.
Yeah, no, I'm also agreeing with you. In fact, I'm giving the suggestion, keeping of this 16, more than 15 RVs recognized. So whoever the RV does this type of service, they will be, in competition, they will be higher, so that more members will migrate to that RVO. And eventually, there may be coordination committee among our RVs. They can form a consolidated list, with the federation of our RVOs. So that will happen once one RV takes this type of steps for the empowerment, extending service which is not there in the law, but without violation of the law. That's what I'm saying actually. Okay.
Correct. Absolutely.
Yeah. Thank you very much. It was a really wonderful session. Thank you very much.
Thank you so much, Alaji, for your feedback. I really hope I was able to do justice to the topic, able to share some perspective. So I thank all of you once again. I thank RVO Sarita ji, Kajal ji. And there is one question coming from Chandrasekhar ji. Sorry, with my limited knowledge, Chandrasekhar ji, why this bill is getting delayed? I think, see, any bill which has to pass needs to have a lobby. As simple as that. So I think somewhere that lobby needs to be a little more stronger. Maybe one day we will see the light of the day and then this bill might get passed. So with that, I'll just end the session here. I'll hand it over to Kajal ji. So once again, thanks everyone. Kajal ji, over to you.
Thank you, sir, for such a wonderful and learning session. Hope everyone found it informative. We have a more CFP on Sunday, that is tomorrow, from 11 to 1 for SFA valuers. The topic is valuation of startup. So if anyone interested, please register on our mail ID, on our website and mail. Thank you. Thank you all.
Thank you very much.